Alright guys, welcome back to the channel. So this is a very interesting video and just sort of having a look through some charts, doing some analysis and started to dig into Bitcoin a little bit more, right? So obviously, as you know, here on the channel, it's a trading channel and we look at institutional order flow and the footprints of smart money. So obviously, understanding that we trade institutionally here on the channel, right, and we look at order flow, institutional order flow, and the way that the big institutions, the big banks, hedge funds are trading, and we basically, you know, we sort of hop on their moves, right? So essentially being a fish on the shark's back, we obviously need large institutional interests in whatever asset we're trading. So I just want to show you a figure here, right? Now this is Bitcoin, okay, the institutional trading volumes of Bitcoin, right? And if you look down here, okay, this is Q1, so quarter one of 2018, right? And this light blue bar indicates the trading volume from retail investors, right, retail traders. And as you can see, it far exceeds the amount of trading volume from institutional traders, right? So hedge funds, big banks, right, big institutions controlling massive amounts of capital, right? And as time's gone on, okay, so, you know, 2019, we're pretty balanced, right? So pretty level between the amount of retail traders trading Bitcoin and institutional interest trading Bitcoin. But recently, especially over the past year and now into 2021, we've seen a massive shift in institutional interests, okay? So a big shift in institutional traders, hedge funds, big banks playing this game, right? So actively trading Bitcoin, accumulating positions, right, distributing out of them positions, effectively, you know, taking retail traders' money, right? Bottom line. So what does that mean for us as traders? So I just want to show you some footprints, right, and some trading ideas that I've been looking at, okay, on Bitcoin and how we could, you know, be trading Bitcoin moving forward, right? Obviously, with the understanding that there is now a large interest, institutional interest in the asset, right? So just to keep this video sort of more beginner friendly for the people that are, you know, that are newer to the channel, right? We're not going to be going too deep into the smart money concepts and what we're looking for in terms of our Wyckoffie and accumulation distribution setups. Instead, what we're going to be looking for is we're going to be just identifying this area on the hourly time frame, right? And a good way that we can look at, if you didn't check my last video out, is to look for divergences on the RSI. Right, so that's how we're going to be identifying it on the hourly time frame. Once we've got our divergences, we are going to be dropping down to a low time frame to snipe our entries, okay, through here, right? So looking to tap into an order block through here to get our nice entries, right? So if you're not very well versed on institutional order flow, smart money concepts, institutional trading as a whole, okay, then some of these concepts, like, you know, the mitigation concepts, may be new to you. So if you get value from this video, be sure to like the video, subscribe to the channel if you want to learn more about this style of trading, and let's get into it. Okay, so a few things I want to do, right? Just want to pull on my RSI. Okay, so when we're looking for these setups, right, let's just go back. Obviously, I want to be dropping down to low time frames, so like the 1 minute time frame. So I don't think we're going to be able to drop back very far. If we just drop down to the 1 minute, just see how far we can actually go back on the 1 minute time frame on TradingView. Alright, so we can go back to the 31st of May, okay, so all these trades that we're going to be looking at are relatively recent, right? So if we just take a look at, let's put that line there so we know that we can access this data on the 1 minute. Okay, and then we'll just pull that line, right, on the hourly. So if we just drop down here now. Alright, so what I want to bring your attention to is here, okay, so look, you can see that we've got higher highs on price action, right, and lower highs on the RSI. Have we? I've actually got RSI divergence right here. Okay, so if we just pull our replay tool back, right, to there, right, you can see that we've got higher highs on price action, right, and lower highs on the RSI. So I want to now drop down to, that's our first indication, right? We want to drop down to the 1 minute time frame, okay? And as you can see that we've had, so if we just remove our RSI now, right, this is our high level that we're looking at, okay? And you can see that we've had a strong push up through the liquidity above this level. Again, I'm not going to get too deep into these concepts in this video because I've done plenty of other videos on the channel. Okay, so basically what I mean by that is if you look down here, right, we've got a strong bullish move that pushes up past this level. Okay, and we know that there's going to be a lot of retail traders that are shorting here with stop losses above, and also breakout traders that have got buy limits above, right? So basically what the institutions do is they buy up into the liquidity in order to fill their opposite positions and then take the market lower, right? And then basically what we're looking for is a mitigation of this level. Okay, so this is what we call our order block. We then want to see a break below some sort of structure, lower time frame structure, a pull back into that order block, and some mitigation and anticipating lower prices, right? If we take a look at the volume, right, you can actually see the spike in volume. Okay, so we know that we've got there's going to be a lot of liquidity above this zone. Okay, so if we just draw it on as a zone, right, there's going to be a lot of traders looking at that as a form of resistance, shorting this market here, right, with stop losses above there. We can see that as we push up to it, we get a spike in volume, as you can see down below, right, a big spike in volume, which we anticipate is going to be the retail, the institutional traders buying up through the liquidity, giving us an order block, right? So if we are understanding that this is now our order block, or as we identify it, our order block, right? And then from our understanding of order blocks, we now want to look for some mitigation of this level. Okay, so again, we've dropped down to a lower time frame and we can see that prices broke below structure, right? So we're getting lower lows, a pullback, and then a test of that order block, right? So short position on that order block, right? Anticipating lower prices. For now, we just do a 2 to 1, right, just to keep it very, very simple, right, just very short little scalps. Okay. Okay, so there's a nice trade there. Okay, and I'm going to be showing you quite a lot more just based on institutional order flow. And again, looking at this figure, we understand that there is now a lot more institutional trading volume in Bitcoin, which is going to help us in the way that we trade here on the channel, right? Looking at institutional order flow, mitigation, order blocks, and all the rest of it. Okay, so now let's just jump back out to the hourly time frame, right, and look for exactly the same setup again. If we just remove the volume, right, hide that volume, we'll bring on our RSI. Let's just remove that to clear it up, right? Okay, look, right, we get higher highs and lower lows on price action, right? Higher highs on the RSI. So now we want to drop down to our 1 minute time frame, right, to look for a nice level to look to get involved, right? Okay, so if we just bring on the volume, you can see that we get a nice spike through this level, okay, which takes the liquidity from this zone, okay, and exactly the same sort of thing there. We've had liquidity generated there. If we just bring on the volume, again, a nice spike through that volume, a push up, breaking structure, and you could potentially, if you was looking at the chart then, have got involved there, okay, on that order block, right, looking for higher prices. Again, if we just look at a 2 to 1, just to keep it nice and simple. Okay, so at the moment we're looking through here, right? We can see that we've had some sort of accumulation down at this level, a nice push up. So if we get a push down into this demand zone, right, we'll be looking for some sort of mitigation and potentially higher prices, okay? Obviously, I don't actually know whether this comes down and sort of shoots up off of this, but we're just, right, okay, so we get a push down. We basically just fill the imbalance here, right? We basically just come down, fill that imbalance, generating some equal lows, right? So if we get a break above this level of structure or push down into this new order block, we can look for higher prices and an even shorter term scalp, right? So we get a break above. We've actually tapped into that order block, right? So you may, if you're aggressive on that, have a position already looking long on the touch of that order block with stops below it, right? Looking for, again, we just said a 2-to-1 just to keep this video nice and simple, right? So again, we can see that we've got some, we're not stopped out of this trade just yet, but this would actually be the better entry, right? So we get a push down deep into this order block, this higher time frame order block, right? We can see that we're generating equal lows. If we pull on the volume, we can see that we've got a nice spike down through all of this, right? So through all of this liquidity. That has been generated here through these equal lows, right? So all of the liquidity here, nice spike down through it, okay? Giving us a nice order block. We're likely to see some sort of Y coffee and accumulation, a push above this structure zone, a tap into this shorter term order block and continued prices, right? That's what we'd be looking at if we're looking at, you know, institutional order flow, okay? Looking to get involved as the banks are trading this, right? As the institutions and hedge funds are trading this asset, right? Break above, tap down into this order block. So again, whether or not, whatever sort of trade you take, both are valid, whether you take this one or this one. Okay, we haven't got stopped out of this one yet. All right, so we're out of that one already. Anticipating price to come higher and take us out of this trade, right? May just be some more mitigation. You can see equal lows being generated, a run of that liquidity. Push above, a tap into this order block, and then expected higher prices, right? So again, just having a look again, right? If we bring on the volume, a nice spike down into here, right? Giving us an order block, break above this structure, push down into that order block, okay? And expected higher prices, right? Alright, so let's just zoom out to the hourly, try and look for, and we'll pull off the volume, right, to make this look a bit neater. And you can see that we do actually take out our other trade, right? So if we just remove all of this for now, just to make it look a bit neater, right? So we can actually see what we're looking at, and then we'll just go again, okay? Bring on our RSI. We'll look for our RSI Divergence, which is a sign that price is likely, especially after a bull run, right? So let me just quickly, right? Basically, the price does three main things, right? We have markdown phases, we then have accumulation phases, we have markup phases, right? So markup phases, okay, and then distribution phases, and we basically alternate between this, right, and just go through the market cycle. Now, RSI Divergence, if you're not very well versed in smart money concepts, right, so looking for lower lows and price action, okay, and higher lows on the RSI is a great thing to look out for, right? To signify the possibilities of an end of a trend, especially if you then drop down to a lower time frame and try and identify smart money footprints, right? Institutional order flow and some Y coffee and accumulation and distribution entries into trades, right? So that's what we're looking for anyway. So again, looking for divergences on the RSI. We don't quite get there. Not quite. Right, so we got 82.89, 81. So if we get lower low, what we got there? 83, 82, so not quite. Right, okay, so let's just reverse it. I went too far. Right, so as you can see, right, we got high highs on price action. okay? Lower highs on the RSI. Another good thing is that we've just come off of quite a strong bull run, okay, on the hourly time frame. So we've had quite a strong bull run. Obviously, we understand that these don't last forever. We've started to see higher highs on less strength. So if we drop down now to the 1 minute and try and identify some smart money interest, right? Some institutional order flow. So if we just get rid of that as well. Okay. All right, so let's just bring on the volume. Obviously, we got a nice spike of volume all the way through there. Okay, equal highs being generated, a run of that liquidity. Nice, strong, sharp push through, a bit of relief, and then one more last push, right? Through there, we then get a break of these lows, right, signifying a sign of weakness. Break of these lows, a pull back into that, okay, and then a dip down, right? So if you was early to it, you may already be looking at that, right, with on a 2 to 1, okay. Just, you know, that's how we're looking at this in a minute. You may already be looking at that as a 2 to 1, okay, mitigation off of this order block, right? Or alternatively, you could look for a break of this larger area, a break of that, a push back in to mitigate, and then looking for them higher prices, right? So let's just get rid of that to neaten it up. So we get a break of that level, right? If you was in that first trade, you would have already hit targets by now. Okay, and we, in fact, where did we spike? Where did the volume spike? Right, it spiked. It initially spiked there. Okay, before we then saw the sell-off. Right. So understand it. So you may, you know, if you're looking at a zone, you may have been entered in this trade. But if you was looking for an actual tap into that order block, you probably wouldn't have got entered into it. Right. So alternatively, you could have looked for an entry there. Okay, so we are coming up, not quite there yet. Right, we've spiked into that order block. Okay. So if you were patiently waiting for that order block to be tested, this would be more of an entry for you, right? Again, just looking for that 2 to 1. Alternatively, you know, getting really tight stops. Maybe you look you look down and you wait for some sort of manipulation or some liquidity generation of that level. Okay, a spike to take the liquidity, a break below structure, a pullback up into that order block, right, before looking for higher prices, which is going to allow you to get smaller stops, maybe something like that, looking at your 2 to 1. Okay, so if we just actually have a look at that, see what we get. Obviously, we want to start looking for evidence of institutional footprints, right? As we understand, there has been a massive interest in institutional, massive shift in institutional order flow, right? So again, okay, look, we get them equal highs being generated, a push above that, okay, giving us our short-term order block through there. We then get a break below these lows, if you can see that, a pull back up into this order block, and then potentially lower prices, right? And again, look, you can see that we just fall off a cliff. So a lovely sniped entry there, right? Okay, so let's just jump back out. Look on the hourly time frame, right? Same again. We'll just keep going as we are. Right, let's get rid of that. Neaten this up a bit. Pull on our RSI. Right, okay, so look, we get lower lows on price action, okay, higher lows on our RSI, right, drop down to our 1 minute, okay, so nice liquidity being generated through there, strong push down, right, let's just check the volume. You can see we get a nice spike in volume as we run this liquidity. Okay, so let's just hide that. And again, to be fair, you may even be looking down here, right? So you may even be looking at just this shorter term accumulation on the 1 minute. For now, we're not going to be looking at that. We'll just pretend we've missed this, right? So push up, run of that liquidity, break of structure, tap into that order block, right? And then looking for higher prices, okay? But we'll just say that we've missed this, right? Looking at this as our order block. Right, okay, so that could be your entry. If you're aggressive, looking at, you know, just keeping that below the rejection, your target's below the rejection, obviously the safer bet would be to look for something like this, but obviously then you're shooting for a higher risk reward trade. Right, so if you took the first option, you would have already hit targets on that. And we'll just jump out to the hourly to see if that hits. I'm pretty sure it would do. Well, not sure, but you know, I'd be surprised if it didn't from that trade. And we just, looks like we just missed that, right? So, but anyway, if you snipe the first one, again, you probably would have got an entry here as well, looking at this, right? So looking at this liquidity being generated, a break above, a tap down into that order block, and then higher prices. So if you understand institutional order flow, right, then you most likely would have been able to snipe a nice trade through there, okay? Or, you know, whether or not, even if you took this one, you was right about the direction, you know, you're not going to win them all. Obviously, look, it looks like we've tapped into some sort of supply zone, seen some distribution at this level before we started to see some lower prices. So again, if you understand institutional order flow, you may have been able to mitigate your risk here and avoid this loss, right? So let's continue. And to be fair, right, you got lower lows and price action, right, higher lows in the RSI. Okay, so if we just pull this back to where we got the rejection, okay, so that's where we got the rejection, drop down to the 1 minute, right. Okay, nice, see a nice spike in the volume through there. Equal lows being generated, a run of that liquidity, giving us an order block through here. Break of structure, a tap down into that. So you may already be long there, to be honest. But let's pretend that we missed this, right? Let's say that we wasn't aware of this, right? And that we're looking for you know, some more smart money footprints, institutional interests at this level, okay? So what do we notice, right? We can see that we've got liquidity being generated here. We've got a potential order block through there. Starting to see some resistance there. We've broke this structure, so we could be looking at this even as a shorter term order block. Just look at the volume through there. Right, so we spiked down into that. Okay, and again, if we just zoom in, right, liquidity being ran. Break above, tap down into that order block, okay, higher prices, right? So let's just say that we're looking at that, whether or not you'll be able to get these tight stops. Just looking for a 2 to 1. So that'll be a nice little entry there, nice little scalp. And alternatively, if you're not looking that low and you're just looking at this order block, if I just remove some of the stuff, and you're looking at this order block we've got marked on here, as you can see. Let's just remove some of this, neaten it up a little bit. We come down into that, get some accumulation at that level, right? Tap back into the order block. So this would most likely, whether or not you got in here or here, okay? Looking for your 2 to 1, which you probably would have already hit anyway, to be fair. And then anticipating higher prices, right? Okay, so let's just have a look at a few more. You sort of get the point now, right? Basically, all I'm trying to explain from this video is that as we're seeing more institutional interests, it's becoming more evident through the trading footprints, right? And obviously we're, you know, it's just something that I noticed, especially, you know, just the repeated patterns in the market, right? And obviously our goal as traders, you know, we're not smart money. Our goal is just to trade the footprints of smart money, right? And obviously as there becomes more volume, more trading volume from them, it becomes easier and easier to notice and follow their footprints, right? So we'll just do a few more just because why not? Doesn't that? Okay, so let's get rid of that, get rid of that. Just gonna let it run through a little bit. 30.08. So yeah, just about get higher highs there, right? Just about. Lower highs on the RSI. You know, relative bull run. Okay. So potentially some shorter term relief here, right? Drop down to the 1 minute. Looking for our entries, we'll just get rid of that, just to neaten it up. Okay, pop that off. Alright, so we can see that we've got some equal highs being generated through there. Lovely spike up through. Volume goes mad through there, okay. So looking at this as our order block, again, we can probably refine this as we're getting some distribution at this level. Okay, so maybe a tap into an order block through here. Let's just have a look, see what price actually does. Okay, so we run that. Maybe if we get a push down, right, so maybe if we get a push down, breaking these lows, a push back up into this order block, anticipating lower prices, right? We may be able to refine this larger kill zone. So we get a break. I think that is going to be our order block, right? So that starting, let's just have a look at the volume. Probably should have done this. So yeah, you can see the volume actually starts spiking there. And as we get up closer, the volume's eased off. Okay, so this would actually be our order block, right? That would actually be the order block through there. Okay, in hindsight, this is the break below. This is the retest. So let's just delete that. Break below, retest. Obviously I know this is now hindsight, but just an example, right? Retest either stops below there or there, wherever you sort of decide. Again, we'll just go for a short 2 to 1 just because, you know, why not? And then we're starting to roll off, right? But as you can see, we get a break below this level. So if we got a push into this zone, we could look for shorts again, okay, if you missed all this, right? Whether or not we actually go back up into here, okay, so we've got some either some accumulation or some redistribution, looking for lower prices. Let's just take the volume off. Right, and as you can see, we're getting lower prices off of that, right? So if we jump out to the hourly, let's just look at a couple more, right? Look at a couple more, and actually we see quite a massive run off of there. Okay, so if you was to actually be managing your risk, let's just have a look through. Let's drop down to the 1 minute, right? So if you was to actually take that as an entry and have some sort of way of trailing your stop, you know, there's some massive potential on moves like this, right? Looking at 49, 48R. Obviously, you know, the chances that you're going to catch all of this move is unlikely, but you know, it's definitely possible if you've got a good way of sort of managing this risk and trailing these stops, right? You can get some massive moves, capture some nice moves from this style of trading, right? So let's just jump back out to the hourly, see what we got. Just delete all of our drawings, start again. Right, and we've actually started to get some higher highs, lower highs on price action, higher highs on the RSI, just about, right? We got them there. Okay, so if we just pull that back, it's a little bit slow to stop it. Drop down to the 1 minute again. Get rid of that. Let's neaten this up, get rid of that. Okay, let's check our volume. We got a nice spike of volume down there. Get a nice spike through there as well. Drawing our demand zones. Break above. Push down into that level, so potentially either looking at that zone, right? Looking for, let's just leave it as a 3 to 1 for the sake of it then. Or we could wait, if we get stopped out of that, look down for either some manipulation of now this level, or looking at this, which may create a new order block over here somewhere, or looking at this demand zone, right? Anticipating high prices. Okay, so we get a push down, right? Creating a new order block, just bring on our, so we get a spike through there. Giving us a new order block. Break structure. Push down into that. Start rallying off. Let's just say it's there. 2 to 1. Let's just move this over, this lost. That lost. Tapped into this demand zone and anticipating higher prices from that lower level, right? Whether or not we do, don't actually know, to be honest with you. And no, we get stopped out of that pretty quick, right? Again, though, potentially some more manipulation, right? Nice spike in volume down there, okay? Nice spike in volume and a push up, right? Equal lows being generated through here. Okay, so again, a lot of liquidity, right? As we've seen here, okay? Even our stop, right? Liquidity being generated, bang, gets ran, right? Let's just pull this off. Break above structure. And by the looks of it, higher prices, right? Could we get a push back down? So it looks like we are going to get a push back down into that level, right? Some potential Wyckoff distribution, okay? So again, a secondary order block. So basically an order block on an order block, right? So again, the selling started through there. Got some lows, breaks above structure, a push down, running the liquidity, okay? Equal highs being generated, which we push up. So we'll be looking for a push up and liquidate from, sorry. Push down into this order block, anticipating potential higher prices in the short term, right? Okay, so maybe just something like this, just for a short term scalp, okay? Just like that, right? Tapped into the order block perfectly, and then potentially higher prices, right? Again, that'll just be a 2 to 1, so like there, yeah? Alright, okay, so let's have a little look. Let's just see if we can see a few more. So let's just get rid of that. Bring on our RSI. Oh, again, jump the gun, right? God, it's like hindsight now, even though it is replay anyway, but you know, it's trying to make it as thingy as possible, right? Lower lows and price action, higher highs on the RSI, nice rejection at that level at the moment. So if we just drop down to the 1 minute and see if we can see evidence of institutional order flow, right? Again, you may already be in this, okay, from there, right? Looking at the tap into this order block, right? If you had your eye on it. Let's say we didn't. Let's bring on the volume. That's a little bit more unclear. I'd say personally we'll be looking at this level, okay? So tap down into that. If we can get a tap down into this level. From here, we've broke these highs, okay? It's giving us a sign of weakness, right? Or a sign of strength, rather. So let's just draw this on properly. Through there. Again, alternatively, your shorter term one, if you was looking at it, would be through there, which you'd already be tapped into, right? And you may have missed that, okay? I'd imagine that would be your way in, right? Liquidity generation, a sweep of that, bang, nice sharp push up. May get a re-entry on this imbalance if we can come back down and fill this imbalance, right? Look, you can see that we've got equal lows being generated through there. If we can get a manipulation of that level, right, which we may have had through them highs, a push down, so that may have been your, if we can get a push down into this order block, you could probably recapture that move, right? So let's just see what we get there. Push down into the order block, so if you're looking at that, okay, stops below the low, just let's go for a 2 to 1. Nearly get stopped out of that, and then higher prices potentially, I don't actually know yet, higher prices from there, right? And again, even if you missed that one, you can look at this order block, which we then come above, retest, and then we see the higher prices from there. Okay, so I think that'll do for now, right? I'm not just going to make this video 2 hours long looking at the same setup repeatedly. But as you can see, right, as there's more institutions that have taken an interest in Bitcoin, we can see evidence of it all the way through. And it's becoming, you know, a lot better to trade the way that we like to trade here on the channel, right, through institutional order flow, following the footprints of smart money. So I hope you got value from the video. If you did, be sure to hit the like button and subscribe to the channel to see similar content. And wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.